This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Talked the seller into going with us more than $2 million less because we had the highest probability of execution and the strongest track record. The group offering 77 had closed 2 deals. They had never done a deal that big. We've closed deals that size, and we've done several deals, and we're now the top buyer in Phoenix.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Building long-term wealth in real estate is possible for just about anyone, provided that they put in the work. Now, the key is getting past the challenges and applying the right knowledge and strategies to surround yourself with good people, acquire the right assets that create cash flow, and focus on investors that invest in your deals. Now, our next guest knows all about this. He is a former television news anchor and sports reporter for Fox Sports and PBS, but gave it all up for real estate. Now, today, his passion is for providing knowledge about financial freedom that inspires him to provide income opportunities to his investors. He's the CEO of Rise48 Equity, where he and his team run 420 units across 5 properties in Arizona worth over $50 million. Now, additionally, he's also the author of the best-selling book, Success Habits of Superachievers, and he's also the host of the Phoenix MultiFamily Association. Now, with all that, I'd like to welcome Zach Haptonstall to the show. Zach, buddy, thanks for coming on, man.
Yeah, no, of course. Thanks so much, Augustino. Really appreciate you having us on the show here and look forward to providing some value for the listeners. So thanks again for the invite. Really appreciate it.
You bet, man. You bet. Now, guys, if you like what Zach has to say, you can reach him via the contact page at rise48equity.com. Okay, Zach, go ahead and tell the listeners a little bit more about your journey.
Yeah. Thanks, Augustino. So I was born and raised here in Phoenix, just grew up in like a lower middle class family, had no real estate ties, had no rich uncle, so to speak, didn't know anybody in real estate or with wealth. I got a journalism degree. So I was a live news anchor, sports reporter for a short time at Arizona PBS, which was cool at first. And I quickly realized you can't really make any money in the journalism industry. And I had school debt, I was ambitious. I was like, this is not what I want to do. And so I needed to make money. And so I actually went into healthcare marketing, of all things, working for a hospice organization. Just kind of, a position I kind of fell into. And so I was working in this healthcare industry, first as a marketer, then director of marketing, and then president and co-owner of a large hospice organization here in Phoenix. We had about 110 employees, got my MBA, and was fortunate to do very well in healthcare. By the time I was 23, I was making 6 figures. I was making more money than both my parents combined. I bought a house when I was 23. By the time I was 25, 26, I had got my MBA, paid off all my debt, paid cash for my school. And I was making $200K a year. So I was very fortunate to kind of, start to build somewhat of a financial foundation, through this high W-2 job. But ultimately, Augustino, I just got burnt out. I wasn't happy. I was working crazy hours, doing something I wasn't passionate about. And I felt stuck, like many of the listeners probably do. And I was like, man, how do I create, freedom of my time, or at least do something that I'm really passionate about instead of being an employee? And I knew I was very ambitious, wanted to do something big. So January 2018, I resigned, sold my equity in that company, and I had no plan whatsoever. So I had no plan. I just knew I wanted to somehow create income or cash flow through real estate. And so at first I was looking at flipping homes. I quickly realized that's not what I want to do. That's basically what I just left. That's very transactional. And in the healthcare industry, it was always, what have you done for me lately? Like, I'm always trying to produce, and every month that scoreboard, so to speak, resets. So I was like, okay, I don't want to do that. Then I started learning about investing, and I started learning about mobile home parks. And so I cold called over 90 different mobile home parks here in the Phoenix area, directly to the seller, trying to do a seller carry. Because I had nearly $300,000 of cash that I had just relentlessly saved over those 4 years, like following the Dave Ramsey plan, being super disciplined. And then I got a little pop from that equity when I sold my shares in that company. And so, I was like, I'm just going to put this money into a mobile home park. And I couldn't find anything that would work out. It just wasn't working. And then I started thinking about it. And I was like, what if I put all my money in the mobile home park? Then what? I'm out of money. It might give me $2,000 to $3,000 a month of cash flow. Then what do I do? So I started listening to podcasts like yours, Agostino. Started reading books, started going online and just trying to absorb as much knowledge as I could. I had never heard of multifamily or syndication. Obviously I'd heard of apartments, but I'd never even heard of the term multifamily. I thought they were apartment buildings, right? Never knew what syndication was, where you can raise money from other investors. So that really intrigued me. And so I decided, instead of looking at all these different asset classes, I really need to dial in and focus on one thing, no matter how hard or competitive it may seem to be, and dial that in. So that was multifamily syndication. Okay. So long story short, I lived off of savings for well over a year, making no money, had no job, basically lost all my confidence. I'd wake up in the morning, what the hell am I doing today? Like, how do I move the needle? It was very discouraging. But ultimately, 10 months in, I met a couple people at a conference. I started going to conferences across the country and trying to absorb all this stuff. And, we got our first deal under contract 10 months in. We closed it 4 months later. So it was 14 months when I quit that job doing nothing else to get the first apartment property under contract. It was a 36 unit, $3.5 million deal. And it was just me, it was me and a few other people. I had two primary partners, a couple other people. We all just put in big chunks of our own money. So I basically put in all the money I had left into this property just so that we could really learn. And that was good for us to learn firsthand. And there's a lot that goes into it from there. I sold my house because I needed earnest money for the next deal and it was kind of all in. But long story short, since then, since we acquired that first property in February of 2019, we've now acquired 27 different assets, all here in the Phoenix Metro, worth over $800 million, over 4,000 units. We have $550 million worth of new assets to acquire under contract right now to close in the next few months. We've built out an entire company. We are vertically integrated with our own property management company. So we have over 90 full-time W-2 salaried employees, all on full benefits. And so we've been very fortunate to kind of experience this scale and build out this infrastructure. But it all started kind of with what you opened up the show with, Agostino, was learning the fundamentals and, trying to apply those and then continue to scale from there. So that's kind of, what the progression has been that we've experienced.
Well, I think that, many people seem to think that it's tend to gloss over all of that hard work, right? And I think it's worth reiterating that at the beginning, it was still very tough. You still didn't really understand or really know what needed to get done. But when you did, you kind of put yourself on that course to the point where you actually sold off your house just to get earnest money. It's like, not many people are willing to do that. That's the thing. They're not willing to do that. And I know that the old me, when I was in corporate like you, I didn't know what multifamily syndication was. Never heard of it. I think my life would have been completely different if I would have known about it. But I don't know that I would have sold my house back then. And told my wife at the time, hey, I think we're going to move into a little 2-bedroom apartment. She probably would have fought me on that, right? That's one of the hardest things is making sure that are you willing to make the sacrifice in the short term for a long-term gain, right?
100%. Yeah, no, you're right. That's exactly right. Yeah, I got to the point where, I was basically all in and I would do whatever it takes. And again, that's an extreme case. It sounds dramatic but you don't need to do that to be successful. You don't have to quit your job necessarily, live off of savings and do all that. But for me, I wanted to collapse those time frames, and I wanted it so badly. I would do whatever it took. And I've always been risk averse. I don't want to do stupid things and lose all this money that I've worked relentlessly the last 4 years to save up when that was my only real focus in life. But I got to the point where I was like, you know what? I need to do whatever it takes. And if I believe in this, it's a calculated risk. And so that's what I did. And so, I've kind of kept that mantra going forward. And when I was, and at one point I had $12,000 of credit card debt. I had no money and I was broke, and we owned like $35 million worth of apartments.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
But you don't make any money because there's a preferred return that eats up all the cash flow. The preferred return goes to the passive investors. And so you have no actual incomes. People think you buy these deals and you get rich. That's not the case. I mean, you don't start making money as a sponsor until you start executing the business plan and selling the deals. And that's when you pay the investors first, and then you get to. So my whole philosophy during that time frame, from before I even got the first deal, when I was burning through cash, feeling that fear and anxiety almost daily, and even until now, is don't give in to the short-term pain to compromise the long-term upside. Because I knew what it was like to be comfortable with a very high salary job, and I knew I was miserable because I felt like I wasn't fulfilling my potential. And so when going through this process, you push those comfort zones and you embrace that fear. You almost train your mind to embrace pressure and to constantly be chasing pressure and the new challenges. And obviously you do it, within reason, and you want to take calculated risks. But once you start to push your comfort level to these points, what other people might perceive as risks, you don't perceive as a risk at all, because you have the confidence you can execute on it, right? And a lot of it's just is us just getting in our own head. And you're not born with this. It's something that you have to earn. It's like working out. It's like you're not going to be born and just have a chiseled body, right? You have to constantly be working at it. That's how this works with your mindset, your emotions. And if you stop, you'll start to deteriorate those instincts as well. And so it's just constantly working on that. So that's kind of what I've seen and what the natural progression has been. And now it's been pretty cool the last year and a half, 2 years, we've able to start to see results from those efforts, because we didn't make any money the first 2.5, 3 years, So that's just how it goes. But you have to take that mindset as an entrepreneur. This is just like any other business. You're going to make those sacrifices, and you're going to have to grind up front, hopefully, so that you establish something that you can maintain long term and have that success. So that's kind of what we've learned throughout the process.
Yeah, and you're also training at the same time too. I mean, you're reading the books, you're learning the materials, you're learning how to raise the money and how to put deals together as well. So it isn't like you just picked a deal out of LoopNet or whatever and decided I'm going to buy this thing. I mean, there's a whole lot of other effort that takes place, and it's worth reiterating too that it's through the study and through knowledge that reduces fear. Right? Fear goes away. Fear will subside provided they have the knowledge that makes you comfortable to get the deal done or to perform that task, right?
Great point. Yeah, you're 100% right. Yeah.
Yeah. So now you grew the business fairly quickly, it sounds like. What were the key components to finding the people and building that team? Because, I mean, I know that these days it's very, very tough to find people to go to work at our company. I'm sure it's very, very tough. But there's other aspects of other businesses that we're also exploring, and one being the hotel business. We are looking at that. But to find the people to take on those critical roles to take care of the customer, to take care of the buildings, to perform maintenance and whatnot, to find those folks is tough to do. Like, how'd you guys put the successful team together? Like, how'd you do it?
Yeah, great question, Augustino. So I think one of the good things about early on was that I have two business partners, Bikram Sandhu, Robert Shevchik, and initially the three of us. And Bikram's our CFO, Robert's our Chief Construction Officer, I'm the CEO. And initially, the three of us, we were doing literally everything you can imagine, from finding deals, underwriting, raising our own capital, managing construction management. I was out at the property chewing out plumbers and vendors, making sure they're doing what they're supposed to do. Like every little thing you can think of, we were in the weeds on. And the good thing is that we learned all those details of every department and every dimension of the company, so that when we did start to need to scale, we could hire people and train them directly with that knowledge to delegate those tasks, so that we can start focusing on more macro level operations. And so it's been a combination. You're right. It's very hard to find good people, Augustino, especially the last couple of years. When COVID hit, you have all these unemployment checks. You have a depleted labor pool across the country, across multiple industries, because people are getting paid to not work. So why would they want to come work? And that was actually one of the reasons why we felt that we had to start our property management company, because we previously were using third-party management. It was going fine the first couple of years, but what started to happen is we started to have significant turnover of these on-site managers that were employed. They were our on-site managers at our properties, but they were employed by the third-party property management company. Other property management companies were literally coming on site, picking off our staff, paying them more money, better benefits, and they would just leave. And because of the business model of a third-party property management company, it's a very low profit margin business, right? So they can't really afford to be competitive to pay more compensation, better benefits. So our whole thing was, we need to bring this in-house. This was after we had over 2,000 units. We're like, we need to bring this 100% in-house, have full control, because we can't afford to have this turnover. And fortunately, our asset management team, and I'll get back to your question here, but our asset management team was really micromanaging the property manager to make sure things were performing well. But our whole philosophy was, let's offer the highest compensation, the best benefits in the industry to not only recruit, but to retain the best people, so we have that continuity. So that's what we did is, and this kind of answers your question too, is we're extremely competitive with obviously compensation, but as far as benefits, we cover 100% of all of our employees' healthcare benefits, medical, vision, dental, and then we cover 50% of all their dependents, which is a very lucrative recruiting tool when we're trying to pull people away from other companies. We hired our controller from Greystar. We picked off a few people from Greystar, which is a big Class A national company. But what we started out doing, Agostino, is our very first hire. She was actually our regional manager for the third-party property management company we were using for well over a year. So we knew her well. Okay, we offered her compensation that made it worth her while to come to our team. We trusted her, and then from there, we really leaned on her to kind of build out the next couple hires for the asset management team, people that she knew well, and she was recruiting directly. Okay, instead of us having to put out posts, that first core nucleus, we would hire that one good person. They would find a couple good people that they've worked with in the past and pick them off from other companies to build that core. And as we started to build, we've primarily used LinkedIn and Indeed ads. And initially, Vikram and I, we were basically interviewing every single person that applied, which was a big mistake because it was just consuming so much of our time. We didn't realize. And I had a lot of experience scaling a business very quickly from healthcare, because we went from 60 to 110 employees within about 12 to 18 months. So I had experience with, a very operationally intense type of business that has turnover and constant hiring. This isn't nearly as turnover heavy as the healthcare industry. But we started interviewing these people, and we realized, we need to have our office manager phone screen these people to make sure that they actually meet the criteria to even get to this interview stage. So then we started putting in these different steps, these different processes, so that when we're actually interviewing somebody, it's somebody who is a strong candidate, not only on paper, but on the phone. And then we want to meet with them. And so, we're constantly interviewing people. And our whole philosophy is that, we want to be proactive in building out our infrastructure at least 3 to 4 months in advance of what we actually need. Okay, so we're actually hiring people right now that we don't even have 40 hours of work for, because we know it's going to take 3 to 4 months to adequately get them trained, get them completely onboarded and ready to go, so that when we do have that workload for them, they're ready to hit the ground running. And so, we don't want to ever feel like we're growing beyond what our infrastructure and our operation capabilities can support, right? So we're always looking to see where can we improve each department. So we'll hire people in investor relations, asset management, construction management, accounting, and we hired an entire executive leadership team for our property management company, and we hired an entire accounting team, a controller, senior accountant, accounts payable, all these people. And so it's really a combination of leaning on your core employees who are very reliable, who are going to be there for a long time, because you can just tell by their dedication and what they've expressed to you, and leaning on them to recruit good people because you trust their judgment. And then obviously you have to always be putting out ads and interviewing people. I think I've interviewed 4 or 5 people in the last week, we've got some more in the next couple of days. So we're constantly interviewing, trying to look for good candidates. And we don't want to feel like we're rushing to fill a position, right? So if we think in the next 3 to 6 months, there's a position that we need to add to an department, or we need to create a new position, then we'll start to interview for that person, because we know that, we're scaling and that it's only going to help us operationally. And so, that's been an exciting experience, frankly. And, And there's a lot of fun things that come with that. Like, for example, we're in this 2,800 square foot office right now, which we've completely outgrown. So we're now under contract to go buy our own office building. We're just going to buy it ourselves, and it's 20,000 square feet. We'll put our property management company and our equity company in there, and that'll give us more room to grow and scale from there. So it's been a combination of these different things that have been been effective for us.
Nice. Now, one thing you mentioned at the beginning of what you're just answering the question there is that you and your partners had to get out there and talk to brokers. Now, that's probably one of the biggest aspects is getting your hands on decent deals. I mean, we're talking about in the green room too, right? I mean, there's I think it's safe to say that in every single market here in the United States, there's a lack of strong deals. I mean, there are deals, maybe they're marginal deals. Some of them are ridiculous deals. But how were you able to get your hands and build those relationships on getting access to good, strong deals before the market could, without knowing anybody? Like, how'd you do that?
Yeah, no, you make a great point, Agostino, because that's one of our biggest advantages in this market, in this industry, is our broker relationships. So, we've acquired 27 deals. We have 8 deals under contract. Okay, so in a few months, we'll have closed 35 deals. 34 out of those 35 have been directly from brokers. One of them, we knew the seller and he came directly to us. So to answer your question, and by the way, the majority of the acquisitions that we've done now have been completely off market with no competition from anybody else, directly through broker relationships, which allows us to source the deal at a good basis without getting bid up in a competitive environment. And so, between the $30 to $100 million value add space here in Phoenix, there's about 5 to 6 brokers that control 90% of the inventory. Okay, and they've been doing it for years. We get the first look on most of those deals, truly, from the $30 to $100 million space. So we've been able to form these relationships. Now, to answer your question, Agostino, you don't start out like this, right? You can't just come into a new industry and have these relationships. And so, by the way, this is a terrifying thing, but you have to do it. When I first started, what I did was I cold called all the top brokers. I went to loopnet.com. I looked at who's listing stuff, and you soon realize LoopNet has all the crappy deals, right? They need to die. That's where deals go to die because they couldn't sell them. But I started to realize that, and I just wanted to get the names and the contact info of those top brokers, right? Then I started looking at the companies that they work for, and these are national companies. Most of these markets, for the listeners, you probably have a local shop in your market. CBRE, Marcus and Millichap, Northmark, Berkadia. There's several of these big companies. So what you need to do is you need to first go to their websites, sign up for their mailing list, okay? So that you're going to start getting all their deal flow. You're going to start seeing all the deals that are out there, and they're going to have like a link for a confidentiality agreement. Don't be scared. It's just a formality. You fill that out. They'll send you the financials so that you can start underwriting deals. And I see real deals in your market that are on the market. I did that. Then I started cold calling all these brokers and meeting with them in person. And I was terrified. I was very nervous because I felt like I had never done this. I was a younger guy with no money behind me. I felt like I didn't belong. This is very intimidating. These buildings are big buildings. These are big numbers, very intimidating, but you have to do it, right? So I would meet with some of these guys and I'm like trying to hide my hands because my hands are shaking, right? And I'm intimidated by these brokers, but I go and meet with these guys for coffee. And then I start realizing some of them don't want to meet for coffee. How do I get their attention? I'll email them or call them and say, hey, can you send me, what deals you have, what inventory? And what you need to do is you need to be very specific with your criteria, okay? Otherwise, they're not going to take you seriously. And don't be intimidated by the brokers. Don't feel like you're wasting their time, because these brokers need to show their sellers that they're getting traction, that they're getting tours, okay? The more tours they can get, generally the better. And so you have to just exude confidence. And I don't ever condone lying, but you need to try to exude some type of confidence or credibility that you have the capability to do this, right? And whatever your background is. For me, I was in healthcare, and I was telling these brokers, hey, I'm coming from the hospice organization, the hospice industry. I've got a large group of physicians behind me that we're all looking to deploy into multifamily apartments. In reality, I had like 2 or 3 doctors I knew who said they might be interested, right? But that's what I represented to the brokers, because we need to portray credibility. Otherwise, they're not going to spend their time with you. And so I would go out there. And so I would let these brokers know what my criteria is. So you need to be very specific and tell them, okay, I'm looking for 10 to 30 units, 1 to 3 million value add in these types of areas. That way they take you seriously, right? And so, I initially started reaching out to these brokers, Augustino. I started, touring deals with them. And I had read a bunch of books, so I thought I knew what I was talking about. I would take a notepad and I would just start asking questions. And I would study the offering memorandum before I even got there. But I was even asking some of these brokers hypothetical questions I already knew about just to try to demonstrate my knowledge so that they kind of take you seriously. So what I did was, not only was I reaching out to brokers, I was reaching out to the most credible property management companies in the market, insurance brokers, attorneys, lenders. I was reaching out to all these people, setting up in-person meetings, vetting them, and trying to get myself known so I can build my team, so to speak. And then at the end of each meeting, like for example, I meet with property management company, I would say, hey, can you refer me to the top brokers, lenders, insurance agents in the market? And they'll say, yeah, of course. So then I call the broker. I say, hey, my name is Zach Haptonstall. I got your name and number from so-and-so ABC Property Management. And this is what we're looking for. What do you have? I'd like to get out there and tour. And so when you're calling somebody and you're dropping the name of somebody else that has credibility in the industry, they start to say, okay, well, at least this guy has a property management company. He sounds credible. At least I'll meet with them. I'll go to the property. So I started doing that just to get myself known. But the first deal, it was on the market. It was not an off-market deal, and it had just come to the market. We had underwritten. I had personally underwritten at least 30 to 40 deals before this. To your earlier point, Augustino, you go through this adversity and you feel like, I feel like I was going crazy. Like, why are none of these deals even working? It's either I don't know what I'm doing, or it's way too overpriced, or it's both, and it's probably both. And so, a lot of it's overpriced, so don't get discouraged if nothing is penciling. But this deal actually made sense. I underwrote it over and over, jumped on it quickly, put in an offer. The deal got accepted. I was like, oh crap, it got accepted. What do I do now? Because it's one thing to be underwriting deals and sending in LOIs that you're not even close to the asking price. But when it gets accepted, it's game time. And now you got to take the next steps, and you're going in. It's like walking down a dark hall. You don't know what's down there. You're going into unknown territory. And so anyways, you learn, you kind of push through that fear we talked about every step of the way through the acquisition process. Something comes up, which is very scary, but you learn from it. And now you can go next time. So the first 4 deals we acquired were all on the market. Okay. We had to go through best and final on some of them. We were able to win them. It was through cranking volume, but through that process, we were able to establish credibility and reputation with the brokers because, we executed on the deals. We made it work. You almost fake it till you make it, because you're scared. You're not 100% sure if you can bring this money or raise the money, but you try to figure it out. You don't want to show weakness to the broker, right? Because you want to give them confidence so they can demonstrate to their seller that they chose a good buyer. And so, those first 4 deals were completely on the market. We were able to not retrade, we executed, and then you start to develop a reputation in the market. And so then we start getting off-market deal flow from brokers that we had not even worked with, but because they had heard we closed deals, right? And so then you start to develop that reputation, and then you can really crank the volume. And so, it's all about staying in front of the brokers. I mean, I can't speak for every market, but I'm pretty sure it's like this in most of the big markets in the country. At least in Phoenix, the brokers control the market. You can send your mailers to your sellers and do all that stuff. I've never done it. I'm not saying it doesn't work, but it's not going to be nearly as effective as leveraging these broker relationships. And so literally every week I'm out touring deals with brokers. We have intentionally not hired a full-time acquisitions person because our biggest advantage is my relationship personally with these brokers. And they know that when we make an offer, I'm the ultimate decision maker. We're raising our own capital. We're signing on the loan. And that, we're not going to blow up the deal with some equity partner who shoots it down. And so we're able to, jump on deals faster than most people because we're local. We get out there, we can underwrite quickly, we can put our budgets together and get an offer out. We shop all the comps quickly for every deal. And we can be more aggressive on earnest money than most of these competitors because it's our own personal cash. We know the market so well. Some of these last 5-6 deals, Augustino, we go $1 million non-refundable day one. Before inspections, we release it to the seller. It's our personal cash. We've built in a very heavy CapEx contingency budget on the front end, assuming a doomsday scenario. We can replace the roofs, the plumbing, electrical. The deal still pencils. We feel comfortable doing that. And brokers know, these guys aren't going to retrade. They've closed every single deal that they've done. They're going hard day one. Give it to them. So there was a deal. This is a real live example. Just a few weeks ago, we offered $75.3 million on this deal, there were 6 offers between 74.5 and 75.5. Okay. And there was one offer up over 77 million. So there was one offer more than 2 million more than us. We were in third. There was a second offer above us. We had the third highest offer. The broker, who we know, we've done multiple deals with, talked the seller into going with us more than $2 million less because we had the highest probability of execution and the strongest track record. The group offering 77 had closed 2 deals. They had never done a deal that big. We've closed deals that size, and we've done several deals, and we're now the top buyer in Phoenix. And so it's things like that. So even these deals that sometimes we don't get off market, Augustino, we now have an unfair advantage in the market because brokers will often tell me where to be at the end so that we can win it, or they'll talk the seller into it. And it's not about, being dishonest or anything like that. At the end of the day, everybody wants execution. The seller wants execution. The broker wants execution so they can get their commission. They want to know they're dealing with somebody who will actually deliver and do what they say. And so because of our reputation, we've been able to, make sure that we execute with all these deals. So that kind of gives you an idea of how leveraging these broker relationships can give you an advantage, both for market and off market deals.
Oh no, it's huge. It's huge because in the Cleveland market, I'm that guy too, right? We go in, we lock the deal up, no fanfare, no screwing around. We don't retrade, we don't mess around with the sellers asking for concessions and adding a whole bunch of time to the deal or anything else like that. The brokers know that we always execute. That part is huge too. It's because the last thing you want to do is have a reputation of doing that, or even worse, putting in an LOI, getting it under PSA, getting through to due diligence, and then on the last day, just before due diligence, you kill the deal.
Right.
That is a great way of not getting deals in the future from that. It's not
just that one broker. All the brokers will find out, right? They all talk.
They all talk.
So you'll blow your reputation quickly. It can work for you or against you. That's right.
Yeah. And now, what sort of things are you doing to attract capital? I mean, obviously, as you add deals. Right? As you add deals to your portfolio, word gets out, your investors hear about it, and they get all excited to tell their friends. What sort of other things are you doing these days to attract capital? Because you're doing some pretty heavy-duty deals out there, right? So the capital side of things is enormous when you're doing deals of that size.
100%. Yeah, no, you're right. I mean, last year we bought 16 deals. We got $560 million worth of properties, and it was like $195 million of equity. So it's a ton of investors, right? And so I mean, you kind of nailed it, Augustino. Our number one source of investors has been referrals from past investors. Okay, so we've now gone full cycle, successfully executed the business plan, and sold 5 of these assets. They were all very strong returns. And as we started going full cycle, a lot of these investors are high W-2 income earners. We have a lot of physicians, engineers, IT consultants, people like that, that are referring their colleagues and their friends and their family because they're happy with the results. We're in the process right now of selling an additional 6 assets that will all close here in the next few months. And so the biggest source has been referrals and has been a very organic kind of grassroots type of movement, so to speak. And then, my wife, Grace, she's our VP of marketing. She runs all of my social media accounts and all of our online marketing stuff. So I don't like social media. I haven't been good with it. But she runs my accounts. And so she's constantly putting out content. And I'll go to a property, I'll show up for 5 minutes, do a quick video on the updates of how many units we've renovated, what our business plan is, what we're doing to achieve pro forma rents. And we're constantly posting articles, doing all this stuff. And we're providing quality content, but the goal is to drive people to a calendar link to set up a call so that we can establish an SEC compliant pre-existing relationship. So it's been a combination of referrals, a lot of social media content. We've invested money in SEO, so search engine optimization. Things like this, have all kind of contributed to these things. And then, her and her marketing team, she's got employees underneath her. They create press releases for every deal that we buy and we sell. So we're getting on national media outlets and the local business journal, things like that. So all these things, can kind of start to snowball and, lead to a lot of investor referrals. And I think, one thing that's kind of unique that we've done, Augustino, that I don't know for sure, but I haven't heard of a lot of sponsors doing it, is we really try to utilize the 1031 exchange. Okay, so of the 5 deals that we've sold, we've 1031 exchanged 2 of those. We're exchanging 5 more deals right now. and we give investors the option to participate or they can cash out. We've seen anywhere from 85 to 95% of the investors are participating, and a lot of them really like that. So I think that's another benefit, is that people refer their colleagues because they realize the benefits and the power of deferring the capital gains and increasing their monthly cash flow. So it's things like that we've seen that have been successful for us.
All right, well, good. So I know we talked a little bit about this in the green room, but as far as what the future holds, right? I mean, I know that, I don't want to tell you what other guests have said, but I've read, because I really want to get your take as to what you believe, say, the next 18 to 24 months hold in terms of multifamily real estate or any other real estate asset in general. I mean, we're in a bunch of other stuff, but multifamily I know it's your specialty. What do you generally think about where the future holds?
Yeah, good. No, great question. So I'll give you my full and honest answer. And I can only speak to the Phoenix multifamily market because that's all we know. Okay. So, other markets in the country and a national perspective may be different, but I'll speak to the Phoenix market. I'll give you some quick context and I'll tell you what our thoughts are. So, right now, most people don't realize Phoenix is the 5th most populous metropolitan area in the entire country. The only cities that have more people than Phoenix now are Los Angeles, New York City, Chicago, and Houston. Phoenix is number 5, and Phoenix is growing faster than anywhere in the country for 5 consecutive years, according to the U.S. Census Bureau. On a percentage basis, it's experienced the largest percentage increase of population in the last 10 years at 21%. So there's a ton of people coming here. And, most people don't realize Phoenix is located in Maricopa County, okay, which is the largest geographical county in the entire country. It's bigger than any county, even in Texas. Most people don't know that. When we say the Phoenix market or the Phoenix metro, we're really talking about at least 15 to 20 different cities in this metro. So us, for example, we bought 27 deals in the Phoenix metro. We have deals in 5 different cities in the metro. We have them in Phoenix, Scottsdale, Tempe, Mesa, Glendale, okay? And they're all within a 30-minute radius of each other. So Maricopa County is this huge blob, right? You could drive from the west side of Maricopa County all the way to the east side in a straight line. You'll be driving for an hour and a half straight. You'll be in city the entire time with no breakup, no suburbs. If you didn't know the city lines, you just think you're in Phoenix the entire time, but it's the entire metro. Unlike these other big markets we talked about, LA, New York City, Chicago, et cetera, though they're all geographically landlocked, so they're having to grow vertically, higher density housing. Phoenix is the exact opposite. It's not geographically landlocked. Everything is literally growing into the southwest and the southeast, literally into the desert. So there's more and more people coming here, right? We were already number 1 for population growth pre-COVID. Ever since COVID, everything here has accelerated exponentially. Population growth, job growth, rent growth, you name it. It's just been crazy. So you have all these people coming here. You have a ton of jobs coming here. Name a big tech company. They're all doing stuff here. Facebook is building an $800 million data center. Amazon has built 22 distribution centers the last 5 years. Microsoft, Google, they're all building big data centers. All these people are coming here. There's literally not enough housing for all the people coming here. This has been an issue for years in Phoenix, and they could just never catch up. Ever since COVID, and we've had this drastic acceleration of population growth, it's even worse. There's literally a supply and demand issue in Phoenix in favor of landlords and investors. It's especially pronounced in our space, which is this workforce housing demographic where the majority of the population lives, but it's also present in single family homes, luxury Class A apartments. And so, you got Phoenix's number 1 for population growth for 5 consecutive years, number 1 for rent growth the past 4 years, top 5 for job growth. There's not enough supply of housing for all the people coming here. And so, with all that said, obviously a strong market can make anybody look smart, right? And then we acknowledge that a rising tide, raises all ships, which we were talking about before we started recording, Augustino. It's a great point. And we've been a benefactor of that, no doubt. But in our underwriting model, we have a very conservative 5-year underwriting model, which assumes that right after we buy the deal, we're immediately going to go into a significant economic recession. And that even with that recession, we can hold through it, execute our plan, and sell in year 5 to achieve the returns that we're projecting to investors. So, for all the reasons I just mentioned, we think long-term, the next 10 to 20 years, we think the Phoenix multifamily market will continue to be one of the most insulated, consistent growth markets in the entire country long-term because of all these fundamentals, job growth, population growth, housing, everything. But short term, the current growth, which is unprecedented. Right now, it's 26% organic rent growth the last 12 months, which is crazy. Number one in the country. When we started in 2018, 4 years ago, Phoenix was still number one in the country at 8% organic rent growth. It's now more than tripled, right? So this is unprecedented velocity of growth, which is crazy. We think the current velocity has about 24 to 30 months left before the velocity will have to slow, because you cannot keep jacking up rents several $100s forever until you hit an affordability issue. Even if it slows down from 25% back down to 8 to 10%, it'll still be among the leaders in the country, because right now, believe it or not, Phoenix is still an affordable market. I mean, according to the Real page, they're saying that Phoenix is still 1.3% below U.S. national cost of living. Rents are $66 below national rents. And so there still is a lot of runway here, but the velocity will have to slow. We're telling our investors that this is a 5-year conservative projection. We've been hitting or exceeding returns in 2 years or less. This could now start taking 3 or 4 years, or 4 or 5 years, but that's what we're projecting. And so I think that's important for investors across the country to understand. Is you may have been spoiled the last few years by a strong market, low interest rates. Obviously, interest rates are starting to increase, but you have to put context into this. Interest rates are still at a 40-year historic low, even with the Fed increasing, right? So you have to put it all in context and just realize it's still cheap debt, and you have to find deals that make sense. The basis is going up, cap rates are compressing, but everything is relative, right? And you look at the median sales price of a single family home in Phoenix, $450,000. You're gonna go buy a starter home, $450,000, which is crazy. So most people, the reality is, Augustino, and I'm sure this is the case in Cleveland and it's across the country, is most of the demographic now will never own a home. And it's sad, but it's the reality, because not only do they not have the down payment, they don't have the cash, they don't meet the debt to income ratio to qualify for these homes. So the majority of the demographic will be renters. And when there's a recession or a downturn, like look at 08, 09, everybody lost their single family homes. They can't afford the luxury Class A apartments. They trickle into this type of housing that we do, which is affordable workforce housing. It's clean, safe communities where the majority of the population lives. This is where they all trickle down. So it is very, insulated in that sense towards a downturn. And so that's why we're bullish on it. And we're just trying to find the good deals that make sense.
Nice. Now, if you had a piece of bulletproof advice for someone listening, what would you tell them?
Yeah. I mean, my advice would be, if you have a goal and you're trying to get into this, then don't listen to anybody who tells you can't do it, and don't take crap from anybody. Because I had so many people that are like, what are you doing? Even my own family, like, what are you doing? You're making $200K a year. Like, why would you sacrifice all that to get into this? And they don't understand what your reasons may be. They don't understand the upside that you're chasing, and your purpose. And so, don't listen to other people, because most people will tell you that you can't do it. And it's usually because they didn't want to take that risk themselves. And my whole philosophy is like, you know what? You're going to tell me I'm not going to do it. Well, you're not going to be the one that has to put in all that work to get where I want to be. And so who are you to tell me I can't do it? So just don't listen to other people. I mean, I think if you want to do something, whether it's multifamily, anything in real estate, or any goal, period, you just have to stay laser focused on it, and don't give in to, like I said, the short-term pain. Just try to basically survive, stay above water until you can kind of break through, and you will break through. Then you'll start to see that momentum, that exponential growth. And I guess that would be my advice. Yeah,
that's got to commit and just become laser focused, like you said. Yeah, I was right there with you, man. I was right there with you. I know firsthand.
It's a similar story and a similar mindset when you have to break through the adversity and get into this. So you know how it goes.
That's right. All right, guys. Well, if you want to reach out to Zach, you can reach him via his contact page at Rise48Equity.com. Check out his stuff. He's got some great website with a lot of great information. Hope you got a lot of insight as to how to really start up, how to really get into this business. I think there's plenty of opportunity if you're really, really dedicated to working hard, working smart, and getting out there and putting yourself out there. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.